Hey everyone, and welcome to Earnings Cheat Sheet for Friday, April 11th. It's Alexis Garcia and Ed Carson here, and we'll be giving you some information on upcoming earnings reports to help you prepare for the week ahead. And Ed, I don't know about you, but I feel like I've lived about 10 lifetimes since last week with the way things in the market have been going. But what do you have on tap for us today?
Yeah, this has been the longest year in quite a while already, it feels like. Want to take a look at Netflix, Goldman Sachs, and UnitedHealth.
All right, well, let's start with Netflix, which is scheduled to release Q1 earnings on Thursday, April 17th. Earnings for the streamer are expected to rise 8% to 570 per share, and revenue is seen climbing 12% to $10.5 billion. And just a reminder, Netflix is no longer sharing subscription figures or guidance coming this quarter. And here's why we're watching Netflix. We'll want to see how Wall Street reacts to the lack of subscriber transparency, and Netflix is now preferred focus on revenue and operating margin. And Ed, we saw Netflix implement a whole host of strategies like cost cutting, adding a new subscription tier, password sharing crackdown. It's kind of ignited a new growth phase for them. And investors were really happy with Q4 results that show the increase in those subscription numbers, but we're not going to have that anymore. So, what's on your radar here?
Yeah, I mean that's the number everybody looked at, and now we're not going to get to see it at all. So that will be interesting. I mean, the earnings growth and the revenue growth has been, especially the earnings growth, has been really solid. The cost cuts, and like certainly as a share of revenue, they just haven't had to spend as much on content, and so that's been helpful. That ad tier has been great. So there is a big bump. It looks like that's going to slow. The comparisons are going to get tougher. They're not adding another ad tier. They're not adding, some of the other things. So still solid growth that expected for the next couple of years. And this one seems tariff resistant. I mean, obviously anything's possible, but this isn't something that faces tariffs either here or in other countries. And most people aren't going to want to cancel their subscription. I mean, it's just sort of automatic. So if anything, they'll cut out other expenses and say, let's spend more time in front of Netflix. So those seem to be reasons why you think it's somewhat safe. Nothing's safe in a market correction in terms of stocks, but it does seem like this is a relatively steady earnings grower.
And let's look closer at the chart then, Ed, because this one's been on my watch list, and we can see here it flirted with this 200-day line, but it's bounced back technically in a double bottom with a 998.70 buy point. So if you're looking at Netflix, and what do you want to see set up ahead of earnings, after earnings, when may be a good point to jump in? Also, we'll point out we've got this blue dot here on the RS line hitting new highs as the right side of that base builds up. Always love to see that.
Yeah, I mean, so that shows that it's outperforming the S&P 500 quite well. And the stock's not at new highs, but yeah, it's really coming in there. So look, this one's setting up. This one is one of the best looking stocks out there. Doesn't mean you should be doing anything with it. We don't have a follow through day. The earnings are coming, but after earnings, it'd be great if it sort of just set up, maybe got above the 50-day line, or even if it stayed below the 50-day line. There's obviously this double bottom buy point just below 1,000. But even if it decisively got above the 50-day line, that would also might offer an entry as well. I will note that you can look on just here, Netflix, while it seems sort of, oh, it's sort of steady Eddie and everything you think but it has big moves on earnings. It does, like often 10, 15%. And a lot of those numbers have been positive. They're not always. So you should definitely know the character of these things. And there's been some big moves lately, but they don't have to. But yeah, this is definitely one people should be looking at because it's one of the top performers right now.
And I'm just switching over to the weekly chart, Ed, because you can see this base setting up here a little bit better. But as you mentioned, the earnings growth over the last quarter really strong. But as you said, comparisons getting tougher. So anything else about the fundamentals that are jumping out to you?
No, it's just been really this steady revenue growth, and that's going to stay consistent. And it's just a little bit slower earnings growth that they're getting. This is just steady performer. Look, its up down ratio is more than one. Anything over one is positive, and in this market, that's pretty impressive. I mean, just to find that the volume has generally been to the upside, that is really just really impressive in that regard. So just a lot of strength in this. You can look on the, and this isn't fundamentals, but you can see these volume bars. The bars are generally on the blue that we're seeing. Again, that may reflect the earnings reports. If the earnings turn in badly, it's going to be a big pink bar. There's not going to be any change about that, but there's definitely been volume to the upside in the short run and the longer term.
All right, well, let's move on and take a look at Goldman Sachs, which is scheduled to report Q1 earnings on Monday, April 14th. Earnings are expected to rise 6% to 11.58 per share, and revenue is seen climbing 4% to $14.76 billion. And here's why we're watching Goldman Sachs. We'll be paying attention to any information on mergers and acquisitions, signs of capital markets freezing, or maybe not, due to tariffs. So, Ed, it seems like the anticipated economic slowdown could pose some challenges here for Goldman Sachs, especially when we talk about M&A, IPOs coming to market, that fee revenue. So, what are you looking at here before earnings?
Yeah, I mean, those are the kind of things we're looking for just to see some sense because we don't really have an understanding. Before Goldman Sachs, we're going to get some other things. We're going to get JP Morgan and Wells Fargo, and those will touch on some of those things. This is more a pure player though. So you want to see how they're doing because it does seem like IPOs, a lot of them are being delayed. Now that happens in bad markets, just in general. It doesn't have to be like, but there does seem to be concerns that things are freezing up. And what are they saying about that? I mean, just we want to get that take because we don't have a whole lot of hard data where this is, and it could be that they might say we don't know. I mean, that's what we've seen for some initial companies like Delta and then Walmart sort of withdrawing some guidance, and that may be what we get. It's like we just simply can't tell you. We don't know what's going to happen, and it may turn out okay. But if there's that indecisiveness, that probably is going to point to a lot of things, companies not making big decisions, whether it's on stock or bond trading or other things that are beyond the scope of Goldman Sachs. So I really do think a lot of these reports trying to find out what are companies, what are consumers doing and thinking, and that's a lot what we're going to get out of these reports.
And let's look closer at the chart, Ed. We're on the weekly here, technically in consolidation, 672.19 buy point. And we can see it really in the last couple weeks dipped below this 40-week line, and it's making a comeback this week. But what would you like to see set up here for Goldman Sachs?
Yeah, we need to get above the 200-day and the 40-week and the 10-week lines and the 200-day and 50-day lines. On the daily, the 50-day and 10-week lines are sort of racing down. It wouldn't take, it may take a couple of weeks, but it wouldn't be. It looks like it's on a path to crossing below. Got to get above those levels. I mean, there's sort of the very ugly double bottom that you could sort of imagine in there, but I don't know if people should really be looking at that, but maybe, but maybe the 600 level or something in there that would also be getting close to the old buy point. Again, we've seen a lot of heavy volume come in on this, and you said there's been some bad breaks. While there have been some comebacks, there's some pretty big selling too, and there's a lot of people who probably bought it, when the stock bounced back from the 200-day line the first time. There's a lot of people who bought it, and there's a lot of people who bought to the left-hand side there. So if this comes up towards 600, you can imagine a lot of resistance. Even if it's showing momentum, and that's could be fine. Maybe it holds up and it sets up. So yeah, I guess ideally I'd see it go above 600, form a handle, and then provide an opportunity. But yeah, a lot of things are going to have to go right. The market's going to have to improve, and we'll just have to see.
Yep. And jumping over to the weekly here, just looking at EPS and sales. Again, those comparisons year over year getting a little bit harder, but still solid sales and earnings growth here for Goldman Sachs.
Yeah, and then there's just the question: are we going to see the outlook with Netflix? You feel a little more comfortable. Okay, may have a pretty good idea how things are going to go, or at least within a certain range. Goldman Sachs is like, to what extent these estimates going to hold up? I think that's a question we're going to ask about most companies. Again, it's just a dynamic, because the economy seems to be shifting around, and maybe it is, maybe it isn't, but just a lot of uncertainty. So those outlooks are just so important.
All right, well, let's move on to UnitedHealth, which reports earnings on Thursday, April 17th. The health insurer is expected to see Q1 earnings rise 6% to 730 per share, and analysts expect revenue to climb 12% to $11.5 billion. And here's why we're watching UnitedHealth. Their earnings call tone will be key. The Q4 call came after that one of their top executives was assassinated, and the mood was kind of anti-managed care. That has all seemed to kind of change, Ed. And we saw United Health stock get a boost recently after the Trump administration announced $25 billion increase for Medicare Advantage plans in 2026. But what else is on your mind when it comes to United Health?
Yeah, so that's the big thing. It's like this one is also a little bit tariff insulated. I mean, a lot of medicals and health insurers in there, they are insulated because, well, the government pays for a lot of it, and then employers and employment may fall a little bit. So, but that wouldn't be right away. Let's say employment falls and they lose something, but that would be gradually over time. I mean, there's not going to see that situation. So can we see solid growth hold up and just continue on in this environment? Like 10% EPS growth would probably be pretty solid, especially if you felt pretty comfortable there. Cost containment is always an issue with health insurers. That's been something, but they have a lot of other things, services and such, that holds up on that. So yeah, so I think we're just going to be looking to see how's their tone on things, not just because we got that positive Medicare Advantage news, but just that sense of, do they feel comfortable talking about cost containment? Because that was probably, I think, a concern. It's like if they were sort of scared, not just from that horrible incident, but from what other people were saying, politicians and others suggested that it was very politically dangerous for them to control costs. So if they feel more like they can do that, that would be better for the bottom line on this company.
All right, and let's look at the chart, Ed, because I'm on the weekly here, and this one forming a cup base with a 630.73 buy point. Again, another blue dot here for that RS line, hitting new highs as the right side of this base continues to build. So tell me your thoughts here with this chart.
Yeah, I mean, there's sort of, you could sort of see, squint and see a double bottom in there, but certainly when it went above sort of the 200-day line, 40-week line, and there's a lot of patterns like this. A lot of the leading stocks are showing this because the market is having these big violent drops, but some of them have been holding up better than others. Yes, they're undercutting those lows from, say, at one point, but they're not crashing the way like a lot like the market seemed to be doing. So this is bouncing back. When the stock came up earlier this week through the 200-day line, 40-week line, and crossing over a lot of resistance to the left kind of thing. There's a lot of other things that was probably an entry as it turned out. Now, it wasn't a great day at first because it sort of on Tuesday, it sort of popped up and came back down, but it's rallying on. Now it's on no man's land. Now I just say it's not, it's sort of weird, feel weird if it ran all the way up, it would be a huge run sort of from the bottom of the base at that point. So ideally, this stock would pause around here. I mean, earnings are coming up. It'd be great if it started pausing right now, at the very least, have a chance for a handle of sorts. And even better, like if it could be a little longer, maybe after earnings, but that's what I think would be nice there. It is not, there's some ugly action in this base. You can see that big sell off twice. Obviously, a lot of things are happening in here, so it's not the most sightly thing. So if you can clean up at the end, it's a little bit like a student who doesn't really pay too much attention but does well on the final. You usually forgive that person, but that's what you'd like to see. The end of the base matters more, but it would be nice to see that clean up a little bit.
All right, Ed. Well, those were some of the big names on our radar for this week. But let's take a look at a few more, starting with Taiwan Semi. We talked about this last week 'cause we were expecting monthly sales. That came in stronger, I think, than expected for Q1, but they do report earnings on April 17th. So talk to me about this chart and what's been going on with Taiwan Semi, because obviously I think a lot of chip names have gotten caught in the crossfire here when it comes to tariffs.
There's so many things going on with Taiwan Semi because there's concerns about the AI slowdown. I mean, that would have been a concern for the stock market, even if there weren't tariffs. Let's be clear, that is an issue underlying it. It's just been completely buried by it. So is the AI revolution going to go on? But Taiwan Semi, they have to worry about, you know, there's a tariff against Taiwan, which has been somewhat rolled back, but there's going to be a semiconductor tariff. So that's an issue. There's a lot of pressure in there. There's the AI slowdown. So what they have to say about guidance, and not just guidance for their earnings and sales, but also for their capital spending is really going to be important for chips and get a sense of things about, how is AI doing? The sales were strong. This earnings report should be strong, but really is the guidance. And we'd like to hear a lot of There's a lot of different questions that Taiwan Semi is sort of at the epicenter of a whole lot of things. Uh, so that I think will be really, really an important call.
Oh, we'll definitely be paying attention to that one. And let's look at another name in this chip space, ASML. As we can see, this chart, not a stock you want to be buying, but talk to me. Same thing here with ASML, really just looking at what their commentary is going to be on the AI market and tariffs.
Tariffs and there's also export controls. I guess that's one of the things that export controls for Taiwan Semi and Nvidia and ASML and ASML that's an issue because selling there. This is one of the world's largest chip equipment makers. So combine that with Taiwan Semi, you'll get a sense of the outlook for the chip sector with a whole lot of cross currents. And you can imagine that they and some of their customers, they might be nervous. Both of these companies are like nervous, or how much do we really want to spend in this environment with so many potential headwinds, beyond tariffs. So definitely something to try to get some clarity. It may not be positive clarity, but it hopefully get some clarity after these reports.
All right, well, that's ASML. They report on April 16th. And last week we talked about Delta Ed, but let's take a look at United Airlines, which posts their Q1 earnings on April 15th. A very different looking chart here. Again, this one's kind of been in a slide since the beginning of the year. RS line isn't too bad. We can see it's also been in a downtrend. So, any thoughts here with United Airlines?
Travel's just in real trouble. And yeah, like this one's probably doing better than almost any other airline. It's not saying much right now. It just, with Canada and Europeans canceling trips to the US, business travel slowing down, government travel slowing down. There's just a lot of things, lot of headwinds right now for airlines and travel. Delta didn't give a whole lot of reason to be encouraged, even though stock surged. But there's a whole lot of things going on yesterday in Wednesday's report. But the still the downward trend and the downward business, it seems like right now at least for 2025.
All right, well, let's take a look at Interactive Brokers. They report on April 15th. And again, this one was doing really well, trading near highs, but has fallen off those highs over the course of the last few months. So, anything on your radar with Interactive Brokers that you'll be paying attention to?
I mean, this is, how active was trading? I mean, trading was probably pretty strong because there's probably a lot of buys and sells. So it's interesting to see this one coming down so much. But we'll probably also get Schwab. That's also in there. So we're going to get the couple of the brokers out there to see how retail brokers are, customers are doing. There is some growth in these companies. So it's interesting because some of them, but even the market exchanges that were doing well are no longer doing well. The stocks, I mean, the stocks have been falling off. So see how, because the business has been pretty strong, supposed to slow down a lot this year. So maybe people are getting off a margin. So that'll be a curious question. Are people are getting off margin? Because that's where a lot of these these brokerages make money, is off the margin loans.
All right, I want to look at Kinder Morgan. They report on April 16th, but I thought it'd be interesting just to take a look at an oil and gas name. Again, this is technically in consolidation, 3148 buy point. But what are you hoping maybe we learn from some early rounds of oil and gas earnings?
Yeah, and this is one that's a little bit interesting because it's a gas pipeline company, so it's not going to swing up and down even as much with the price of natural gas. Oil prices have been plunging, but natural gas is more domestic. I mean, there's the LNG, but it's not the same. So it doesn't have the same kind of swings. Though if you punched up UNG, which would be an ETF for the price of natural gas, you can see how that had been really strong for a while and now has slumped off if you start worrying about, growth there. So going back to Kinder Morgan, again, that isn't as tied, but want to see how that's going, what they're saying about things, what are their spending plans. But if it can get above 29, that would probably be that 29.13. You can see that and sort of where the buy point was from the prior base. So you can imagine that being potential again, anything in the current environment. If we have a follow through day and other things, by the time it gets up there, that's different. But any buys right now for any stock are a little bit sketchy.
And I just want to take a look at one more name. That's DR Horton, just to get your thoughts on home building segment here. They post fiscal Q2 earnings on April 17th. And again, this isn't the chart of a stock we would necessarily want to buy, but I'm just curious to know your thoughts on what you're maybe hoping to hear in commentary for this earnings.
I'm not sure what we can hear that we could expect to be too positive because you can just see like, look, labor may be tighter now for various reasons, for immigration, otherwise, and that's an issue. But building supplies, lumber tariffs are coming in. There's steel tariffs. There's probably going to be copper tariffs. Those are all things that raise the cost of housing while demand might be weakening. I mean, mortgage rates, they were coming down with treasury yields, but treasury yields have rebounded, and I think there might be a wider spread now. There's becoming not so much on super secure things, but it's widening a little bit. So that's making things more expensive and heading into recession. It just seems like, this is a super big ticket item, and consumers are probably going to be a little bit reticent, and the cost side seems tough in it. So even if things are better than expected, it just seems like there's a lot of headwinds on something like this. Again, housing can sometimes be the industry group. It is now 186, but there was a year, and I don't remember, like 10 years ago, where one year was the best group and then the next year was the worst, or the vice versa. So at some point, the script will turn and things will turn around. And boy, housing can go on a big, big run. It just does not seem like that's going to be the case in 2025.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune in to Stock Market Today with Alyssa Corum. That goes live after the closing bell. And we'll see you all right back here next week.